Let's just explore this idea just a little bit further. While many equities have lagged gold stocks, were the best performers in August, with gold prices gaining more and more momentum. What is the best way for you to invest? Well, joining us now is Tom Lydon from ETF Trends and John Duty, founder of Gold Stock Analyst Newsletter. To both of you, great to have you on the show. Tom, why do you say, despite the fact that actually gold miners have been doing not too badly, perhaps not the same kind of gains as the metal behind them, but nonetheless, why do you say that they're sitting around their cheapest levels since the tech bubble or 2008 financial downturn?
Yeah, well, right, Mandy. And Sharon did a great job outlining the choices that you have in gold. But the idea is, from a PE standpoint, you've got a lot of these miners that are sitting on a ton of cash and are trading at single-digit PEs. And the fact that investors have the choice between buying the spot gold in ETFs like GLD, or actually buying miners like a couple of the market vectors ETFs that were announced. I mean, right now, from a valuation standpoint, if you can pull an ounce of gold out of the ground for $1,000, let's say, and sell it for $1,800, $1,900, the profitability is huge. And unfortunately, in August, a lot of the gold mining stocks kind of thrown out the baby with the bathwater. So at this point in time, we see great values. And if you're choosing spot gold versus miners, I'd kind of go with the miners at this point.
You know, John Duty, the cynic in me says that maybe the mining shares, the stock market itself is skeptical about the rise in gold prices, so they're not going to bid up the shares of the miners at this point. What do you think?
Well, Bill, there's a certain amount of truth to that, because most analysts are using a price deck going forward around $1,200 or $1,300 an ounce. But as you know, we don't look at that. We don't forecast future gold prices. We look at current gold prices. And since we cover 70 producers, we want to know who's cheapest now.
And who is?
And our top 10 stocks are up 13% so far this year.
Who's your favorite right now?
Well, we believe in a basket of 10. We think you can make your own ETF, your own mutual fund. So it's sort of like saying, who's your favorite child? I don't have a favorite child. And if I knew the favorite one, I'd only have a top 1 pick. But in fact, it takes 10 to make to limit the risk in this business. This is a risky sector.
And Tom, real quick, who are your picks?
Well, I like the market vectors, gold miners, and also the junior miners. The junior miners, again, a little bit more nimble, easy to react, but I think the key thing is demand. I just got back from China this weekend, and there's no doubt there's huge demand in China. We're coming on in the Asian holidays, Indian wedding season.
Oh, yeah.
I think we're going to see gold go up another 10% before the end of the year.
All right. John, Tom, good to see you both. Thank you for your thoughts on gold today. Appreciate it very much.